A lot of investors are losing a lot of money, unfortunately, on some high-flying SPAC stocks. A lot of high flyers in general were taken out back today, but SPAC stocks in particular have just gotten beaten up, just brutal, down high single digits, down teens percentages in a single day. Some of them are down 20, 30, 50% from their recent highs. So it's been a terrible run for several investors in these high-flying SPAC stocks. And there's a lot going on here. There's a lot of narratives going on here. There's a lot of technicals going on here, fundamentals with the company themselves. But ultimately, folks are wondering two things. Why are they dropping so fast, so quickly? And where's the bottom? What does the bottom look like? Let me get into those two questions after a quick 10-second plug about what are you watching. So you're watching, if this is your first time tuning in, you're watching Unrivaled Investing. My name is Daniel. This is a no-hype, mission-focused channel to try to find you exceptional companies in unrivaled investments. Usually I'm trying to find you potential multi-baggers, the types of stocks that can go up hundreds or thousands of percent, but sometimes I take a little bit of time to talk about what's going on in the market or some broader trends that can be helpful for investors to understand. If you enjoy learning about potential multi-baggers, make sure you subscribe. If you're already a subscriber, I do appreciate that thumbs up. And if you want to follow my personal journey to see what are the potential multi-baggers that I'm buying, the type of asymmetric, risk-reward investments that I'm considering, go to unrivaledinvesting.com, click on Journey. Now, let's go back to those two key questions that people are asking, which is, why is it dropping so fast? And where's the bottom? A 50% drop from the recent high, could that be it? For example, if you look at what happened today alone, some of the investors' favorites are just brutal what's going on with their prices. Clover Health down 8% alone today. Metromile down 16% alone today. CCIV, which is bringing Lucid public, dropped 13% alone today. And keep in mind, with a company like Clover Health, it's already down 20% below its deal value. So below that $10, nearly 20% below its deal value. And so a lot of folks this is a wake-up call, especially seeing what was, a major deal, Chamath Palihapitiya's deal, Clover Health, where, this was a favorite. This was one of his largest SPACs. And to see something like this is shaking a lot of people, saying, whoa, this is trading below that $10 price point. I thought these deals could only go up. So this is a wake-up call for a lot of people, and I think that's part of what you're seeing. A lot of these SPACs selling off in tandem. Wow, these things can go below the deal price. It's a wake-up call. But I think that there's actually two reasons more on why it's dropping. One is the narrative, of the broader narrative of what's going on with the market. And I can save that for a separate video. But the key aspect here, particularly with SPACs and a lot of these high-flying potential stocks, a lot of potential stocks, story stocks, is that I would argue it's the type of buyer. And so what do I mean by that, by the type of buyer? I mean, when you have an interesting company and it trades at a compelling valuation, you can have, and even if the stock price isn't going anywhere, you have fundamental investors saying, hey, what's the risk reward? And that's the camp that I try to come from. I try to, I pencil out these valuation sheets, and if you've seen my prior videos, almost every video on a company, I put out some sort of hypothetical valuation, risk reward of what this could look like. Hypothetical, my back of the envelope, and I encourage others to share their feedback, their input on how they think about the risk reward and how it could lead to a different outcome. So you have fundamental investing, where you look at the risk reward and you say, hey, I'm penciling out a conservative scenario, and even in that conservative scenario, I think I can make money. That's like the perfect setup, is where you're saying on my low side, I make 30, 40, 50%. And then on my upside, I have hundreds of percent. That's like the dream scenario, where you're looking at these things and you take super conservative and you still make money, and then you do it aggressive, you make tons of money. That's what I'm looking for. Most of the time I don't get it. Most of the time it's like down 30% and up 200%. Or up 150%. And that's what I find most often. But when you really want to get super aggressive with your investments, I'd argue, is when it's like the former, the up 50% on the downside and up 300% on the upside. So that's the type of setup that you want to think, and that's one type of investor looking at the fundamentals. What does this company do? What will this company look like in the years ahead? What are their margins? What are their trends? What's management have to say? Is this an unrivaled company? That's a key filter I look at with all companies. And that, honestly, that filter alone tosses out a lot of companies. So I might miss things that go up straight up because I say, hey, I don't think this is unrivaled, and that's okay. It's not going to be part of my journey. So you have these fundamental investors. Now you have another camp of investors. Who else do you have? You have momentum-driven investors. You have investors, you have another camp of investors that are like, hey, this is what social media is doing. I just want to be involved. So you have these other different camps of investors. Now, keep in mind, I'm not saying these are bad people. I'm not saying they're poorly informed. I'm not saying they're making bad decisions. They're making decisions that are based on their own life choices and their own life experience. It's not my journey. It's not the journey that I'm looking to go on, and that's fine. I'm happy on my own personal journey, and I hope folks in their respective camps are happy in theirs. But if you're in a momentum-driven camp, what you're looking at is you're saying, hey, what's the price action doing? And if the price action keeps going up, I'm a buyer. So all of a sudden, a SPAC that's priced at 10, it goes to 15. You go, oh, I like this price action. Then you bid it up. Ooh, the price action keeps going higher. This is great. I'm going to hold on to it. Now it's at 25. Keep going on to it. Keep going on to it. Oh, this stock's going to the moon. And you've seen that with a couple of the SPACs that I called out. One of which, at one point was trading at $50, even though it hadn't even announced a deal yet. That's a reflection of pure, speculative fervor or pure momentum driven of like, hey, this price just keeps going higher. Why not? Why not own it? Why not just keep owning it? Now, this is the reason, this reason that drove these momentum investors to drive, or momentum speculators, to drive the stock higher and higher. Hey, momentum's great. Let's keep doing it. This is the same thing that's causing these huge drops in a single day, and these huge drops from their peak is because the further the stock price goes, that's driven by the momentum investors, the bigger gap you have from a reasonable basis in which a fundamental investor would be willing to consider. And so you start, let's say a fundamental investor says, hey, 10, 11 bucks. Yeah, that deal value, it makes sense. Oh, now it's at 15. I'm not interested. Oh, but at 15, that's 50% price momentum. So those momentum investors, and then it starts going on the social media. People start pumping it up on Reddit to the moon. You start seeing those emojis. Oh, now it's 20. Now it's 25. You see that. But once again, the core fundamental folks that put together a risk reward based on reasonable analysis, they're still saying, hey, you know what, maybe 10, 12, that hasn't changed. The fundamentals haven't changed. No news has come out on the fundamentals in a lot of these cases. It's just, hey, this is how people are feeling. And you know what, at some point, the momentum stops. And at that point, you have this huge air gap, this pocket between the price that the momentum investors were willing to speculate and what a fundamental investor is willing to pay. And that's the reason why in such short order you have these huge drops, is because people are up. Now it went from 25 to 23, or now it went from 25 to 24. It's no longer that momentum play. It's no longer that play where you can say, oh yeah, it's going straight up, I want to own it. Well, if that's no longer part of your camp, and that's how you speculate, well, you're out of the situation at that point. And so if you're out of that situation, who's that leave to buy it? Well, it leaves the people that aren't informed and don't know the game that they're playing. And then who else? And that's why you get this big gap with the fundamental investors who are like, I'm not putting in a bid. So then people start waking up and saying, oh man, I own this stuff. It's now 22. Was it 25? You know what? I'm out of this. Like, how do I get out of this? And the bids, people aren't looking to put in good bids. The reason why people aren't putting in good bids is, once again, the fundamental investors haven't stepped up to bat yet. They're saying, I'm not interested. So you need to understand the technicals of what's driving the market, is understand these different pools of investors. You have fundamental investors, you have momentum, you have technical, and you have retail, and many retail investors that honestly they're just excited to be part of the market and don't necessarily know what's going on with individual situations. So you need to understand each of these pockets. Ideally you should understand what you own. So that's what I would argue is what's driving some of these stocks to drop so significantly in a day. Now, the next big question that I'm getting asked is like, well, Daniel, you must be finding incredible bargains now. Where's the bottom? And that gets back to the main point as what type of investor do you want to be on your journey? On my journey, I want to be a fundamental investor where I'm sizing up the company, sizing up the risk reward and saying, hey, is this compelling? Am I excited about their value proposition? Am I excited about their growth trajectory? And based on a reasonable assessment of that, do I think I'll get an attractive risk reward? That's simple. And so at that point, that's when you start finding bottoms. You start finding bottoms when the risk reward is just crazy. It's ludicrous. And a lot of investors that haven't seen a full market cycle don't realize that ludicrous valuations look a lot different than they do now. You know, a lot of these are just super frothy companies where you may not even have revenue yet. And so where you find a bottom with a lot of these stocks is where I'd argue you have the fundamental investors willing to say, hey, the risk reward is just so compelling at this price that I'm stepping in. Now, look, of course, could the stock market rebound to tomorrow? Of course, anything's possible. But I think you will always be at risk of these dynamics if you have a large gap between what is ultimately momentum driven versus what's fundamental. What is the intrinsic value of a company? And, you know, Journey subscribers know, and this is something I actually talked about less than a month ago, is that I was actually expecting a SPAC bust. I called it out as an exclusive video. I said upcoming SPAC bust. Now, I expected in the upcoming months to happen, and this is a little bit earlier than I expected, but still, it was a legitimate risk that I was thinking about. So this price decline that we're seeing in several of these SPACs, it really isn't that surprising to me based on taking a fundamental view. Now, if you're interested in that, I have a full catalog of my exclusive content. If you go to the description of this video, I'll post it so you can just click. And that's part of what I'm doing with Unrivaled Investing is I'm sharing potential multi-baggers, calling out what I own, calling out what I think is going on with the market commentary so that it can be helpful for folks. But I hope this video has been helpful for you for understanding, A, why are things dropping so fast, which ultimately there's a pocket between fundamental investors and momentum investors, and where's the bottom? The bottom depends on, you go company by company. What do you think of their margins? What do you think of their growth profile? What do you think of the market cap relative to where this company could be 5 years from now? And that's part of what I'm trying to do for you with putting in, giving you the tools for these hypothetical, valuations for these companies. You need to put in the inputs yourself. I take my first cut at it, but that shows you how I'm thinking on a lot of these things. So I hope this has been helpful for you. And if this is your first time, checking in, make a point of subscribing. If you enjoyed this video, hit a thumbs up, and thanks so much for watching.